Let's move on. That's Concord Management. Big plans in the pipeline for Concord. The stock as well has seen a bit of a recovery coming in. Let's now welcome on board Sanjay Shah, the CMD at Prudent Corporate Advisory Services, to find out how their quarter has been and what's it looking like going forward. Sanjay, hi, morning. Good to have you in ET now. A strong set of numbers, clearly, strong capital markets, strong retail participation, everything was going good for you. But do you see this kind of growth continuing, specifically in the SIP segment?
Yeah, I think if you look at good morning first of all. So if you look at overall, I think the retail traction in the SIP has been very, very strong. And fortunately, because if you look at last couple of years, experience has been reasonably very, very good for the retail investors. And the options are very, very limited for them to look for alternative other than SIP. So I feel as long as market remain constructive and you don't see a huge volatility, I think retail will continue to participate because if I'll tell you frankly, compared to last year, I think even this current quarter also, we have done very reasonably well as far as SIP book is concerned. And in last 1 year, we added almost 40%. So we were at 542 crore in June 23. In June 24, we came to almost about 780 crores. So it's a 40% uptick in the SIP book.
Right. Mr. Shah, I want to understand incrementally where is the money going? Because the flows were getting concentrated towards mid cap, small caps. Then they moderated their side going towards multi-cap and large caps. Are they back toward mid-cap, small-cap, or they are evenly balanced right now?
No, I think if you look at overall gross flow, one thing which is supporting the money coming in the mid and small cap segment is the very large SIP book in that segment. So what is happening is that the new lump sum money is not going significantly towards mid and small cap, but the SIP book is very, very large. And that's the reason you will see that consistently flow is coming into mid and small cap. However, we have been seeing good traction into, I think, the multi-asset allocations or the balance advantage kind of a category in last couple of months. So it's not that the only money is going into mid and small cap, but still mid and small cap is there in the lump sum category also.
Right. Okay, so I want to understand that up till now the volumes are good and you have applied a lot of technology. If we talk about scaling of the business even higher from here on, what is the operating leverage which companies such as yours can get in the next 1 or 2 years?
I think, frankly, whatever we are supposed to create as the backbone or the infrastructure in this business which is required is you need to have a very strong physical presence and the very strong technological backup. So I think both the things has been very well invested by us. So my belief is that, and that we also assume that going forward, the entire wealth management piece should grow at about 20-25% because I think market will continue to reward on a longer run about 10-12%. So assuming 12% comes by way of market growth and about some 10 to 12% comes by way of SIP book. So if your top line is at 20-22%, we assume that other expenditure will definitely not go in the same pace. And that is the reason I think operating leverage will continue to be very, very strong over a period of time.
Right. Now, interestingly, the margin picture as well has improved by about 30 basis points to 24.3%. That's lesser still than the highs of 28% plus that we witnessed in FY23. What's the outlook on your margins? Will they remain range bound or has the upcycle started? And if so, what would be the levers for growth?
Overall, I believe margin should remain stable in this range as far as operating margin is concerned, because if you look at, we are one of the largest B2B player into the country where we mobilize business through almost 31,000 mutual fund distributors from the country, where our payout ratio remain very, very constant. So if you look at operating side, I think operating margin should remain very, very stable. However, I think EBITDA margin should gradually improve because of the payout cost would definitely remain under control.
Right. You know, Sanjay, they say that the Amrit Kal for the MF industry as well in India has started. Just wanted to, understand from you what really is the long-term potential that you foresee for the MF industry, especially given now that, a 250 rupee monthly SIP also could be introduced. So just wanted to understand what the long-term potential is from the MF industry, especially in the coming years, and more so the non-tier 1 markets.
So to be very, very frank, I can tell you this is the industry which is very, very strongly correlated to the growth of economy and the increase in the per capita income of the Indians. And as per capita income increases, I think the significant money should go towards household savings. And if you look at last couple of years, the household saving has started coming incrementally towards non-FD and non-real estate segment, wherein the large chunk is, I think, going to mutual funds and the insurance. Fortunately, we are also strongly present in both the segments. So overall, my belief is that the compounding growth of AUM in the range of 20-25%, something which you can definitely foresee over a long period of time, wherein that you might see some amount of bout of volatility because of mark to market or some correction will come. But overall, I think on a longer run, you can definitely assume. Another important thing is that in spite of such a huge rally, today the mutual fund is hardly about 15-16% of our GDP. And if you look at the developed market or the average of the world is something about 56 or 60%. So we still have a very long way to go. Another important thing is, in spite of such a huge participation, today hardly about 4.5 crore people are investing in the mutual fund. So there also we believe that the number of people participation will also increase. So I think it's a multiple levers of growth which is visible in the wealth management and specifically mutual funds. And as you rightly said, 250 rupees is something which will probably provide the entry point to all the smallest of the people who can start creating their wealth. And I assume this is the best way of financializations and giving the financial freedom to the retail investors of the country.
All right, thank you for joining in. Good to have you on board, sharing with us your growth targets and what the outlook is for Prudent Corp.
If you like this video, then like, share and subscribe to ET Now.